Hello, everybody, and welcome to Hash Rate. My guest today is Evan Malanga of Yuma. Hello, Evan. How you doing?
Hey, Mark. How are you? Thanks for having me.
I'm doing great. Thank you for coming. So let's just start off with Yuma. I mean, we all know BarrySilbert, right? So, and we know we sort of view him as like, or at least from my perspective, I sort of hear about what he's doing, right? He's like Zeus on Olympus, kind of moving around. Like I see, lightning in the sky, but we don't know exactly what's going on inside of the chocolate factory that Zeus is building, right? So that's what it looks like from my perspective. We get little tidbits here and there, and we know the broad outlines. But we're here today to talk about Yuma. So why don't you tell us what is Yuma first of all, and then tell us a little bit about how it came to be.
Yeah. So first of all, again, just reiterate, thanks for having me. It's great. It's great to be on, Mark. So yeah, it's a funny analogy of Barry on Mount Olympus as Zeus, but to me, he's just my boss.
He's just like a guy. Yeah.
He's just a regular guy. He's just my boss. Yeah. Yeah. So what is Yuma? Yuma is many things, right? We touch the subnet space through our accelerator. We have a validator. We're mining. We got some other stuff coming down the pike, so to speak. How did Yuma come to be? I mean, it's kind of a long story. It's a multi-year story.
We have time,
but it is somewhat indicative of the DCG model, right?
Let's just go back to what Yuma is for just a second, because I have sort of a concept in my mind, and I think most people sort of do too. We think of it as sort of a Y Combinator for subnets, like it's a subnet accelerator primarily. Yes, I know there's other things you're doing. Is that perception correct, or is that not correct?
I think it's a goal we're aspiring to. I wouldn't say we're the Y Combinator yet, but it's a good analogy to describe what we're doing today, and it is a good goal that we're aspiring to build one day to have that type of a program with cohorts and an application process, and it's highly sought after and selective. And we're in the first inning of building that basically. But in addition to that, we have the validator, we have the mining, we have these other business lines that generate revenue within the protocol. But the accelerator piece was kind of the thing that got us started over a year ago.
Yeah. Okay. And so tell me, how did it come to be? Like, I know, DCG, you got Barry, right? So Barry's out there saying, hey, I think this is another Bitcoin, right? Type opportunity. And I don't think he said that since the Bitcoin days. And so he's sort of, this is like a decade plus later on where he's going, oh my God, there's like another one of these things. How can I sort of turn all my efforts to take advantage of it and to sort of bolster the ecosystem in the same way that I bolstered the Bitcoin ecosystem, I think from like when it was worth $1,000 up to like $10,000 per Bitcoin. That was sort of Barry's hand, maybe even, primarily moving the market from 1,000 to 10,000 in a lot of ways. You're trying to replicate the same playbook now, is my understanding. Is that correct?
Yeah, you spot on. Like we're taking the DCG playbook and applying it to Bittensor with Yuma, right? Like what DCG did with Bitcoin, right? You have Grayscale, which solved an access problem and allowed investors to get access to Bitcoin. Yep. Foundry is solving infrastructure problems. They wanted to bring hash rate onshore into North America, equipment financing, mining site services, right, and site operations, right? So like a Foundry all supporting Bitcoin, and so on and so forth. All these other subsidiaries were kind of built around Bitcoin infrastructure. And then on top of that, out of the parent company, they were investing. So there was a venture investing. There was a lot of M&A. So we acquired Luno. They acquired CoinDesk. Right? So these were acquisitions, right? So like everything was kind of this build, buy, invest mentality.
Yep.
Playbook around Bitcoin, and kind of extrapolating that into the world of Bittensor is exactly what we're doing.
And it was kind of like every aspect of Bitcoin. Like you mentioned, Foundry is now I believe the largest miner in the world for Bitcoin. Right?
The largest mining pool. They're not the largest miner. They run the largest mining pool. Yeah. So they're the pool operator. Yeah.
And sort of getting that set up in the United States was hard before Barry came along and kind of made it a lot easier. And I know that DCG, Digital Currency Group, there were a lot of people who were interested in perhaps investing in Bitcoin, but they weren't crypto people. They were like, look, what do you mean a wallet? Like, what is that? And how do I set that up on my PC? And what if I lose my private key? And also my fund can only invest in equity vehicles. And so I can't invest in cryptocurrency, even if I want to, with this vehicle that, with my fund, because my charter won't allow me to. And Barry provided DCG, which now gave these people a way to get exposure to Bitcoin using the charters that they had and the vehicles that he made available in the equity side of things. So, which that is actually a lot more important than I thought it was, right? Because I was one of these people who was like, what? Just go buy some Bitcoin. What's wrong with you? Or just go to Mt. Gox. Just buy it and get it down to your wallet. But like most 90% of Earth doesn't think that way, and that was sort of hard for me to sort of understand, right?
Yeah. I mean, investors want you to make it easy for them, right? Like make it easy, right? Like self custody, access. How do I get dollars from my checking account or whatever into Bitcoin? There's a lot of steps, especially 10 plus years ago, right? So solving those access problems, creating products for investors to access Bitcoin and then eventually other cryptocurrencies. That's really where Grayscale came about.
Yeah, and so so now Bittensor, as Barry says, right? It's like a little apostrophe there, right? Yeah. Like filet-o-fish. So Bittensor, I'm just going to say Bittensor. Bittensor is sort of in the same state, if you will, that Bitcoin was in back in 2013. Where it's sort of Mt. Gox days. Everything's kind of hard. How do I get my Tau? How do I load it in? What wallet do I load it into? How do I invest in subnets? Oh, I've got to use one of the 4 or 5 sites that are out there to actually invest in subnets. It's difficult. Like, it's not that difficult if you're a crypto person, but if you're not a crypto person, all these steps, it looks like witchcraft, right? Which is very much like, using Mt. Gox to buy Bitcoin in 2013. That looked like witchcraft back then. So Yuma is about sort of de-witchcraftifying all of that, in every dimension. So you mentioned subnets, validators, mining, and I guess staking. We know that you're incubating. How many subnets are you incubating right now?
So let's it may be helpful because I'm going to talk about the model a little bit to kind of bifurcate, because there's a distinction between acceleration and incubation. I think it's important, right? So when I think about the Subnet Accelerator program at large, right? The lion's share of there are 13 subnets that exist today within the Yuma portfolio, and the majority, all but 2, are accelerator, meaning we provide the subnet. There's been some sort of investment, launch support, post-launch, post-investment support. We call it platform, right? So there's a platform of services, right, which we can get into in a second. But we are not originating the code. We are not coming up with the idea or anything like that. It's really like teams that come to us. There's a barrier to entry to get on the protocol. In the pre-DTAO world, the subnet purchase prices were in the millions of dollars. So that was a clear problem we identified kind of in the Yuma origin story of over a year ago.
Yeah, and just for the general audience that doesn't know what you're talking about right there, in order to start a new subnet, you have to buy a bunch of Tau and then use that Tau. You need to stake that Tau in order to get the rights to operate the subnet. And that has, in the recent past, been $1 million+ worth of Tau. It's come down quite a bit, but for a while there, that was like a big problem. That was a really hard hump to get over. So anyway.
Yeah, exactly. I mean, like you go back to a year ago. I mean, it was 2,000-3,000 Tau to get a subnet slot, and so the barrier was real. The amount of teams that were sidelined was real. The interesting dynamic around it, though, was if the subnet failed and got deregistered, you recouped your Tau. Like, that was not burned in the protocol. So it was a really interesting way for us to start experimenting by lending these teams the Tau to do this, and taking a share of their emissions in exchange, to start kind of tinkering around, is there a business model here? All right. So that was kind of like the business line number one. Separately, at Foundry, which we've touched on already, they were running a bunch of validators for a variety of different protocols, Bittensor being one of them. And so we started looking at, okay, there's all these DAI protocols that are coming up. A lot of these are fundraising. A lot of these are coming up on their TGE. And Foundry was supporting the investments team at the parent company with staking support for these various protocols. And as our conviction was increasing with Bittensor, the validator was kind of like this natural pair of like, okay, so the parent company, Evan and Barry, are investing in these teams with this unique Tau accelerator model. And we've got this validator over here at Foundry. Does it make sense to kind of mash these groups together? And that's when the wheels started turning on, if we do create this thing, how can we kind of take what we already have and kind of Frankenstein it together a little bit in the foundations of what could be a business, right? And so, but to answer your question directly around Accelerator, there's 13 that are live today. Accelerator, we are not originating the idea. We are not originating code or anything like that. It's purely like investment and advise and support them getting launched and post-launch. On the incubation side, there is a clear, like, we are owning the pen. We are helping originate code. We are potentially helping craft the business model there, right? So there's more onus on our side to building the subnet, and there's a distinction in the economics that come with that. And so today, Coinmetrics is a great example of an incubated subnet. We used to, Foundry had done some experimentation with an S&P 500 subnet that got deregistered prior to DTAU. That was another one. And we also have Nadix Subnet 72 that we helped get live, right? So there's been a few of them. It's not something like, from a scalability standpoint or a resource standpoint, we can't sit there and say like, we're going to do, one a week, right? It's not possible. Yeah. So we'll do a couple a year. But the majority of our effort is on the accelerator side, which is, more shots on goal, so to speak, and getting more and more teams onto the network.
Yeah. Now, is Sturdy one of yours? STURDY? I can't remember.
Sturdy, Subnet 10? Yes. They were our very first subnet. Oh,
really? Okay. Yeah. Very interesting.
They were,
okay.
They're I think they went through Y Combinator. They're a Pantera portfolio company, and they reached out saying, "Hey, we need help getting on." And that was kind of like the wheels were starting to turn.
That was they were your pieces
over a year ago. That was like May of 24, I think, May or April of 2024.
Well, I love what they're doing now, right? So for those who don't know, for the general audience, Sturdy has a long history of doing several things, but within the Bittensor universe, they are now about to release. I don't want to call it a bridge and wrap token because it's not a bridge and wrap token, but it's a way for people on Ethereum and Base and down the road Solana. But right now, I think it's just Base at the moment, and then Ethereum coming later, to use your MetaMask wallet and the assets that you already have in it. So Tether, USDC, Ethereum, or Ethereum, right? Because that's what you use on Base, to purchase subnet tokens. And those subnet tokens, you don't have to touch Tau or know anything about Bittensor at all. And those subnet tokens just go into your MetaMask wallet, just the same as anything else you would do in the Ethereum-based universe. And that is magical, because that's doing that is super hard without that capability. Now, this is not up and running yet, but it's coming. And the other thing that's really unique about what they've done is, which I think is brilliant, the subnet tokens are not wrapped bridge tokens. They are actually on the EVM layer of the Bittensor native chain. So they are real. They are real native subnet tokens actually existing on the Bittensor chain while being in your MetaMask wallet. That's amazing.
Yeah.
So yes,
completely reducing friction and increasing network adoption, which is Yuma's goal. And like, we love to back a team like that, but like, taking a step back, like, Yuma's objective is to bring value to the Bittensor ecosystem and increase network adoption. And so, like, that's a great example of getting a team that was sidelined onto the network, and now they're building all these tools to allow any network participant to reduce the friction that it is to access how to get USDC into this ecosystem, right? So they're a great team and absolutely cracked. Sam's an awesome founder.
Sam is fantastic. So yeah. Sam Foreman, the lead guy over there, the founder. Yeah, I mean, from my perspective, this is one of the most important things anyone can do for Bittensor adoption, because if you look at the 128 subnets that are inside of Bittensor, comparing things to the ICO days or even the DeFi days, the ICO days were like 90% garbage, right? The DeFi days, I would say, was like 20% really brilliant stuff and 80% garbage. I would say the BitTensor subnets are 80% awesome stuff and 20% garbage. And I've never seen that sort of ratio of, the density of quality before. At the same time, if you look at the valuation of the subnets versus their real world outside of BitTensor counterparts, something like Ready AI with a kind of a storied executive team, the CTO co-founded, co-invented AdSense and sold it to Google. And the CEO is an ex-Disney exec, right? So a killer team. And they're basically, Ready AI is a BitTensor version of Scale AI, more or less. Scale AI with a 28 billion with a B dollar valuation, recently acquired by, or acqui-hired, whatever you want to call it, by Facebook or Meta. And you look at Ready AI, their valuation in the BitTensor subnet universe, I think is like 10 million with an M. Right. So quite I don't know what it should be, but it sure as hell shouldn't be 10 million if this other one is 28 billion. Right. So why is it 10 million? And the reason, as far as I can tell, is that it's really hard for people who want to invest in that subnet to go through all the steps. I got to get my Tau. I got to get my Tau wallet. I got to figure out how to use, taustats.io, which is a very highly complex site. I mean, it's not for us, but for most people it is. It's not Coinbase simple, right? So there's a lot of money that wants to get into Subnet 33, Ready AI, but it has no idea how to do it. Sturdy gives those people that don't want to mess around with all this stuff a way to just use the MetaMask wallet they already know with the assets they already have. Massively world changing. So thank you.
Yeah, no, I hope to see more and more dollars or tokens or Tau, however the value transfers coming through bridges like that into the ecosystem. So
yeah, and I think it's also done extremely well. I mean, the one thing there is another group that just yesterday launched their wrapped in bridge tokens on Solana. And even though I applaud that, I am worried about, the wrap tokens and the bridge hacks, because we've seen that like 50 million times. So whereas the way Sturdy, I'm always like a little scared of that. Whereas Sturdy's not a bridge and not a wrap token. So it's constructed, I think better and more brilliantly. So yeah, applaud that. Okay, so let's talk now about validators. Because I want to hear a little bit more from you. I've been talking too much. I want to get the microphone back to you. Yeah. So tell me a little bit about your validator partnerships. First of all, let's explain what a validator is for the sort of general audience that may not know. And then what are you guys doing with validators?
Sure. So what is a validator? I use this example from the Olympics. There's 3 participants in the network. You have subnet owners that define competitions. No competition has to be the same. There's 128 different competitions. Your miners are your athletes. They're your competitors competing for rewards within the defined parameters of the competition. And your validators are like your judges. They're determining which miners get what rewards based on their performance within the defined parameters of the competition. And so by virtue of us being a validator, we validate across the universe of 128 subnets. And it allows token holders, so any Tau holder or alpha holder can stake their Tau or alpha to the validator and accrue rewards that vary based on subnet and APRs and all that stuff and staking yields and whatnot. But ultimately, that's the function of the validator, right? Is to reward miners, and the validator itself makes a commission as well. Okay,
and so now you guys are. So you have validator partnerships, is what I've been told. Is that correct?
So, yeah. So kind of nested within our overall goal of building the Bittensor ecosystem and increasing network adoption. And to your point about like how can consumers access this in their basic wallets, institutions have the same problems, right? As you're an institution, you're a fund manager, you're an asset manager, a liquid fund, VC. There's all different archetypes within the segment. That use custodians, wallets, exchanges. They have compliance requirements. They need licensed or regulated entities. And so by enabling staking through validator partnerships with players like BitGo, which is a qualified custodian, Copper, which is licensed in the UK, right? Crypto.com and others like this Uphold, right? You're opening the aperture up for what would be otherwise sidelined participants that need that more institutional grade infrastructure to then possess the Tau at a basic level, but then also stake it and earn their yields as well, right? So it's another step from a different segment, more institutional, and in doing so, obviously, there's benefits to both, right? The BitGos of the world, the Coppers of the world, they're monetizing this through increased assets under custody, and they make custody fees. They may have ancillary business services that they're selling. Some may provide liquidity, other sort of like more esoteric products like options or things like that they can sell into these customers. And then for us, right, we increase stake and make money with the validator commission rates, right? So it's a win-win for the partners and us. And it enables new entrants to enter the Tau ecosystem, which is fantastic. And I mentioned all of our partners, but one I will add to the list, which is about to be announced or will be announced by the time this airs, is StakeKit, which is just rebranding to Yield.xyz. I had never heard of them. Most people probably haven't, but they're actually a very simplified API infrastructure to enable wallets, exchanges, custodians, et cetera, to access multiple protocols with a few lines of code to be integrated. And so Yuma will be their first Tau validator for their existing set of customers. So it'll open up a whole other list of infrastructure providers across the crypto ecosystem just by virtue of being a customer through their piping that already exists.
Yeah, no, I think this is another one of those points which is perhaps underappreciated by the general audience. So I've admitted on Scopal Show, not on Hashrate yet, but I've admitted on Scopal Show that I am working on putting together a Bittensor hedge fund. So I am now, neck deep in the world of BitGo and Copper and all those. Right?
So we're already positioned to capture you as a customer.
Yes. And so what does my world look like as that guy, right? Because you want guys like me building these hedge funds because that's new money that comes into the ecosystem, right? That then goes into both Tau and the subnets, which powers this whole, kind of startup universe, right? Mm-hmm. And but a guy like, a person like me has a problem now. I can't just use my ledger. Right in my sock drawer to store,
and controls and investor money that you need to manage. Yeah, absolutely.
So basically, the custody solution is never mind Bittensor, but just custody in general of crypto is a big problem, right? So these entities that you just described, part of what they do is they solve that custody problem so that there's proper, multi-sigs and multiple parties in the custody and the backups and all of that stuff. It's just much, 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 much safer in their hands, right, using their products. But this is further complicated by the fact that because we're dealing with Bittensor, the subnet tokens are not all equal, right? The subnet tokens, each one of them is actually rehypothecated Tau staked to a certain validator. Yep. Right. So my subnet token, my subnet 14 token, and your subnet token aren't the same because mine is staked to Tau.com and yours is staked to the Yuma validator, right? So these are not actually fungible, right, in a certain sense. Like they have the same value always, but they're not really the same token, right? So you also want to make sure that the validators are legit and are also run. You don't want to go with a fly-by-night validator because who knows? If you're staking your Tau with that validator to get that subnet token, and that validator turns out to be unreliable or gets slashed or, there's all kinds of bad things that can happen there. So you need reliable validators. So having you guys come along and be like, hey, man, we got to get this validator thing under control. We want to provide legit validators, either with ourselves or with partners and solve this part of the equation so that BitGo and Copper can solve the validator part of the equation so I can solve my problems.
Exactly. I mean, most people don't, you kind of, even as a community participant, I've been in this ecosystem for like almost going on 2 years, which is crazy to think about. You don't realize like how much the infrastructure matters to a player like a BitGo or a Copper. They're going to do deep due diligence with us. They care about having SLAs in place. They care about uptime. Do you actively own and manage your infrastructure? If a validator goes down for some reason, outside of like a protocol level issue, but if a validator goes down, I'm Yuma's on the hook to paying Mark's missed rewards if I was down for an hour and you had, that many number of blocks go by,
Yes.
right? And so like as a fund or an institution or a whole other segment that I didn't even anticipate 6 months ago is all these digital asset treasury companies that are publicly listed. They all have all these compliance requirements. And so, the BitGos, the Coppers, et cetera, and there's a laundry list of other people we're talking to that haven't gone live yet, all care about these nuancy things. They have deep due diligence processes. They have very complex, strict SLA requirements that I think we are skating towards a puck of like that kind of infrastructure maturity that doesn't necessarily exist where the space is today. But that will all change 12, 18 months from now, right? So, but we're excited going after this section of the market.
Yeah, I know that. I mean, Rizzo, Rizzo, Frank Rizzo, the validator, right? So there's a guy named Frank Rizzo. His name's not really Frank Rizzo.
His name's not Frank.
That's a fake character. It's from the Jerky Boys, if you know that.
He told me the story. I won't reveal his name. I don't want to dox him, but
I'm not gonna either. But like, it was really funny because I met him in Austin. I think that's where I met you, right? At Endgame, and I went up to him. I was like, "Hey, so that's from the Jerky Boys, right?" He's like, "Oh yeah." Hey, it's Frank Rizzo. I'm going to come down. I'm the super from across the way, right? That character.
Exactly. Yeah.
So, but anyway, so he, one of the things he is doing is his validator is insured. So if you see the list of validators, like they all have different names, his says Rizzo insured, right? And his pitch is, my validator is insured against us getting slashed or losing the coins or whatever, right? So you're always safe with me. So, so I think you're right. I think we're going to see a lot more sort of things like that, right? So, so good for Rizzo. I think it's a clever.
Yeah, no, they're great. They're a great team. They're all over the market. I see them at every conference. He's got the koozies. They're all wearing the blue polos that say Rizzo. I mean, they're a hilarious group, but they're good guys. Yeah,
no, they're awesome. I have the same impression. Okay, so let's talk about some sort of deeper cut, like sort of infrastructure or Tau or Bittensor wide issues.
The controversies.
Controversies, right? So, for a while on this show, like kind of every show, I was going, the root is too damn high. And by that, I meant that if you stake your Tau to root, so you don't bet on any subnets, you're just, staking with the chain. There was a period of time where you could make 20% APY pretty reliably, right? Sometimes even as high as like 24 or 25%.
Like in the days after DTAO was high. Like it was.
Yes. Well, I mean, the reason for that was because as new subnets are born, they gush tokens, some giant amount of which goes to the root stakers, right? As converted into Tau. And so every time a new subnet is born, like the root APY just went up more and more. And for a while, we just had a lot of new subnets being born, right? Until we just capped it, at 120, which I think was a great move. Thank God we did that because I think it would have been.
Oh, you like the cap?
I do like the cap.
Okay, well, we can add this to the list of.
Okay, let's just talk about the cap since we're here, right? So, because people were just adding new subnets like crazy, and I just sensed that we were going to enter meme coin subnet land pretty quick, where there just a bunch of bullshit subnets were going to rise up, and I think it's bad for the ecosystem for there to be like 50% garbage in it, and I felt like at 128, like I said, I feel like 80% of it is pretty good, and I feel like we should just continue to incubate that 28, and focus on that 28 as sort of the first class for some period of time. Also to keep the root down, like the root is down to like 9% now APY, which I still think it's too high. I think it should be like 4%. And the problem with the root being too high is that disincentivizes people with Tau staked in root from instead staking it in a subnet and sort of betting on the favorite players in the ecosystem, which is better for the ecosystem. That's my take. What's yours?
All right, so I'll start with the subnet cap. I hear both sides. I am not in favor of a cap for a very simple reason. The analogy I use is, what if the iPhone capped the number of apps in the App Store at 128? Right? Like let's let the free market. If the purpose of DTAO was to be a more markets-based incentive mechanism, lower the barriers, the subnet price came down to purchase a subnet. Like, let the free market be the free market for a while. Eventually, the I don't want to say like low quality, but the kind of like gamified subnets where people are just purely speculating on like, will this be the next subnet to launch? And then there's a price bump, and then they sell the news, they buy the rumor, sell the news kind of thing. And like, people, I feel like there's a lot of talk in the community around that kind of stuff. And like, to me, like the speculation is kind of like a feature, not a bug in a sense. It makes it more complex to navigate, and you do kind of get lost a bit in the noise as to where like real teams are building real value. But this is like, we're talking like 120 days since this thing launched, and the protocol change is still so new that I'm like, I kind of am like, let's play it out. Let's see where this goes, because you don't want, the next 128 subnets to be teams that are evaluating something to do right now and they go somewhere else, right? Because they can't.
That's a really good point.
Right? And so for me, it's more about like just like opening it up to innovation. I hear the points. There's also amazing teams within the 128, as you mentioned, that are doing awesome things from a variety of different standpoints. But I want as many people building on Bittensor as possible. The other aspect, which we haven't really talked about, is like the unique way that this adds to creative capital formation, like how a new subnet that starts emitting tokens can be leveraged to, formulate some new business, get a new team on board. So like we can kind of go down that rabbit hole as a separate thread, but like my TLDR is no cap.
Huh. Yeah, I mean, you make some great points, and I'd not thought of oh my God, we might lose the teams to something else if we shut the door and don't let them in, and we don't want that for sure. I find myself in the very bizarre position of arguing in favor of the Soviet-like price control, not really free market but controlled market, which is not me usually. Like usually I'm arguing your side, free markets, let the market do what it wants. And maybe I'm wrong. Maybe you are correct. I feel uncomfortable arguing for the Soviet version of.
I mean, like I don't know. I was too young at the time to know, but like I'm sure there were entrepreneurs and founders out there being like, man, this Angry Birds thing is just capturing the attention of everybody, and I'm building like a real business, and all these kids are just like flinging birds around on the screen. But like, you need the Angry Birds of the world to drive adoption, like drive attention.
That Angry Bird?
Exactly. That one, right? You need that, right? It's part of innovation and the evolution of a new protocol, like something like this, right? And a whole new technology.
You do. I mean, there was one. I mean, so I'll tell you where I'm coming from. Like, this is sort of. I used to run a company called The Palace, which was like this avatar chat thing in the '90s. We had 10 million users, so it was pretty big as a phenomenon. It wasn't a great business, but it was a huge phenomenon for a little while. And it was basically a chat room, like an avatar chat room. One of the things we learned was once a Palace server, because people could make their own servers and their own sort of environments that did things and had games and stuff in them. Once a tone was set for a particular Palace server, like, the way people acted in there, like there was absolutely no way to reverse it once it, if it had become like seedy, if this was like, the place, this was the back alley, like it was always the back alley. There was no way to sort of pull it out of that. And if another one, if it was like the library and people were polite and, and decent, it tended to stay that way, and it very much resisted a bunch of bad people coming in. And we found like these servers like solidified into one or the other, within the first couple months of their existence. And once they gelled into one thing, they never went back. So I kind of like, I feel like the reason I'm arguing with it is because I want Bittensor to gel into what it is right now. Largely, I want the tone to be set, because I know it'll remain if it could just get long enough to sort of, solidify. So I think I'm ultimately on your side after a period of Soviet controls, at least for the first 6 months, something like that. And then take the controls off.
Yeah, I'm sure all the subnet teams are enjoying like a breath right now of like, okay, there's not any new competitors coming in, and I can like focus for a minute. But we can't stay at the cap long. I
agree. Okay, so we agree on that.
Yeah.
All right, so let me ask you about this. So, we spoke earlier about Ready AI's like ridiculously low price, market cap wise. And I'm talking about just circulating supply. I'm not talking about fully diluted because I don't care about that. I don't think anybody really does.
Yep.
So circulating supply of the subnet tokens for each subnet. And if you look at any of the subnets versus their real world corollaries, it's exactly the same. It's all the same story. They're absurdly underpriced, right? And if you just look at something like Shoots, which is sort of Squarespace, or Targon, which is sort of like Squarespace for running AI models, if either one of those companies, given the giant amount of usage that both of them have, I mean, their usage is insane. Like, I think Shoots has 200,000 users, right? Wow. Like actually, that's their customer base, right?
And I know they're processing like trillions in tokens.
They just announced I think it was 8 trillion. Yeah, it's easily trillions, right? It's an absurd amount of product market fit. If either Targon or Shoots were a regular venture backed company, their valuations would easily be in the several hundreds of billions of dollars, maybe $700 million, probably billions of dollars, like fairly easily, right? And if you look at Shoots, like their market cap is like, well, it's 80 million. If you look at Targon, it's like, well, 30 million, right? Like that seems insanely low, right? So you have these low market caps. That's dynamic one. Dynamic two is there's an awful lot of emissions in each subnet. So if you're invested in a subnet, you have to suffer something like 1% dilution per day. Mm-hmm. Depends on the subnet because they're on different schedules, right? They start off at being like 2.5% per day, which is roughly 75% per month. It comes down quickly after birth. So I don't know what it is right now. I haven't recalculated. I actually calculated.
But aren't the staking rates higher too? Like, I mean, I don't know if it fully offsets your dilution, but they do have higher staking APIs.
Yes, they do. But I guess what I'm saying is like there's two schools of thought right now. One is it's just like you're just dumb if you invest in subnets at all because you're just suffering just crazy dilution. On the other hand, the market caps are super low. And this little crazy moment of history when like, oh my God, remember when Shoots was like below 100 million? That was insane, right? It's like talking about Bitcoin at like, 5 cents now, right? I think we're in that moment with these subnet valuations. How do you view that situation? Is it crazy to invest in subnets now or not, given all those facts?
I probably will not give investment advice on a podcast.
Fair enough.
So a few high level thoughts here. First, I think Bittensor has an awareness problem in a few ways. One, it is extremely complex to understand. It takes the average, I feel like, subject matter expert in crypto a couple of months to kind of really wrap their head around this, assuming you have a day job on the side, kind of trying to figure this out on your nights and weekends, right? Two, there's so much different activities happening that the audiences or the customer segments of people that need to have messaging communicated to them to varies. So like someone in the world of Shoots compared to investors just considering about Tau may be a totally different messaging and conversation. So there is like a large awareness problem that I think the community knows about. I don't think it's something that like we're clueless on. Like, I think everyone knows that like we're all kind of locked in arms together trying to get the word out there in a variety of different channels. The other thing, I hate to repeat something I said earlier, is like it's so early to figure out a brand new market. like I don't know if we call it the TSP, the total subnet price, at like 1.25. Like, I don't know. Is that fair? Is it overvalued? Is it undervalued? Should it be 10? Should it be 5? Should it be 1? Would the 1 be the most efficient market that the sum of the parts equals the whole? Like I don't know. What I think you're articulating is part of the business case for what Barry announced in Paris, which is Yuma Asset Management, which is, these subnets are ever changing and complex. It is very difficult to understand what is happening in one of them, no less 128 of them, no less what could be 1,200 2 years from now, right? It is it's very difficult to understand what's happening, stay on top of it, and then on top, like once you have made an investment decision, monitor it, right? There's just too much change happening. So that's one kind of pillar. the complexity. The second pillar of the business case is the access, which we've kind of already talked about throughout this conversation, is you have to go through all these steps just to touch the alpha tokens. And then even once you get there, there are no qualified custodians that support alpha tokens today, right? The ones we've partnered with right now are root staking, and then we'll eventually maybe move into alpha staking. But like, this is going to take time. And so those two problems for us made it very clear that investors of all walks of life are going to need access to products that simplify this for them. And so that is why we're launching an asset management business. I probably can't say much more other than that. So more to come after Labor Day, but it's a very big market opportunity that we've identified that we think Yuma is primed to go after.
And so where do you think the new money is going to come from? Do you think it's going to come from institutions first, or do you think it'll come from these bridges and consumer? Any guesses on that?
I think the longer term money will come from more institutional players. And there's a lot of VCs out there that invested in Tau early that are still sidelined in the alpha market, if you will, that are looking for easy ways to do this. I mean, given this is DCG's, one of their biggest investments in incubating and launching Yuma, and obviously Barry's the CEO of Yuma, right? Like, we spend a lot of time looking at this. Most other investment managers aren't, right? They have analysts and principals and associates looking at a variety of deals across a variety of markets, and so they're not living and breathing the world of subnets like we are. So there's a clear moat of having access to the network, having access to the subnet teams, the kind of technical chops and understanding what's going on. But there are a lot of VCs out there that took early bets in this community, in this ecosystem, that I think are trying to find ways to smartly deploy, and they just don't have the time, the bandwidth, or the capability to figure it out, and we can do that for them.
Yep, that is, as someone who's neck deep like you are, absolutely. It's. I have a hard time keeping up, and this is pretty much all I do now. And it's a fire hose of information, subnets as well as just sort of the complexities of Bittensor itself, right? Understanding the nuances of, like if the sum of subnets goes below 1 tau, right? If it dips below that, then the emissions back off. Right, it stops emitting. There's all kinds of little knobs and wheels and things in there, and some of them I know about, most of them I know about, but even now it's like the Great Glass Elevator. I find some new thing in some Discord where somebody says something, I'm like, wait, what did you just say? And I find some new little nuance that I didn't know about, and then when I go to some of the OGs and I'm like, hey, did you know about this? They're like, oh no, I didn't know about that, and we both go digging into the white paper and like, oh, there it is. It just wasn't something that had been widely discussed. There's so many things like that it's just really hard to keep up with.
It's a next to impossible task in of itself. I mean, we've got a 20-something person team. People are posting in our team chat like, oh, here's an update, here's this, saw this, right? This between Twitter and Discord alone, before you even touch Telegram, like there's just so many updates on a daily basis. You can't keep up. You cannot.
Yeah, it's impossible. As someone trying to keep up, I can concur with you on that. Okay, so let me ask you another quick question. So one of the other things that has sort of been on my mind is, threats to Bittensor. What could sort of derail this, right? Because I'm always thinking about the disaster scenario, and in my mind, there's not a lot. I mean, I think it was born really well. I think in a lot of ways it's reached escape velocity already. However, A16Z could come along and say, hey, we're going to come out with, A16Z tensor, right? And we're going to solve some of these problems that Bittensor has, just like Solana solved the speed problem of Ethereum, right? Like it made a better Ethereum. Do you think there's some chance of a Solanification of Bittensor? And what do you see on the horizon for competition?
The Solanification, it may happen. I don't think it's going to happen anytime soon. I think if we are at the point of Solanification, that's probably pretty good for Tau in of itself, like that it's gotten big enough where people want to build a totally different version of it, or like where ETH started getting all these L2s and stuff like that. That probably means Tau in of itself is in a good spot, and we're all probably pretty happy.
Yeah.
Whether that Solanification will be successful or not, I don't know. But when I think about like the broader, the A16Z tensor or some of the other decentralized AI protocols, we've seen a lot of Web3 fundraising happen in that vertical. Very few have actually launched a token, had their TGE, launched mainnet. Very few. So there's a lot of big names that have raised big money that have yet to ship anything, which I think is just an interesting data point in of itself. Meanwhile, there are subnets on Bittensor that are already doing what some of these other protocols' whole existence is meant to be, and it's just one of 128 on Bittensor. You know what I'm saying? So, which is also another fascinating and interesting data point. I had this interesting kind of point when I presented an Endgame, some analysis we were doing at the parent company at DCG before we formed Yuma, around venture capital dollars flowing into this world. And so I think the data point for the 2024, so it's a little bit older now, but for 2024, I think it was something like, in the 30s of billions of dollars went into Web 2 AI investing that year. Web 3 AI investing was like a fraction of that. It was like less than $400 million. And so it's like, how could a Web 3 entrepreneur even compete compared to the competitive capital moat that Web 2 has coming out of Silicon Valley? But then if you take that on a unit economic basis, it was something like roughly 3 to 1. So like for every $1 invested in Web 3 AI, $3 were invested in Web 2 AI. When you overlay Bittensor into that, the annual incentives for Tau in 2024 were like almost 4x the entire Web3 VC market in of itself. Like the billion-ish dollars that went out in 2024 of Tau emissions, and Bittensor alone closed that unit economic gap to like 2 to 1, which is just like gives you a sense of like the power of the incentive mechanism built behind Bittensor. It gives you a sense of the importance of the feverish community that formed organically around Bittensor. Like they just like Jake and Alla just launched this and people started showing up, which is so powerful, right? Like that,
it is,
which is a key pillar in the thesis here. And I think the last point, which is also really underrated, is Jake and Alla kind of first started building this, years, like almost a decade ago, tinkering.
Yeah.
So they have already seen and failed at and pivoted on problems that some of these teams that are fundraising today, they've already done it 8 years ago. And like they just have such a head start on some of these big AI problems, and their vision is huge. And they want to actually, be a force for good in the world by building this for humanity. So I don't know. I feel like you can't bet against the community around Bittensor right now.
Those are some incredibly excellent points. So thank you for all that. I'm going to replay that several times and kind of like, wait, where did he say that?
We got the soundbite.
Yeah, that was some good stuff, man. Thank you for that. Okay, so we're coming up here on the hour. So before we go, is there anything I didn't mention that you think we should cover?
I think we've pretty much covered most of it. We talked about the Subnet Accelerator. We talked about Validator. We talked about asset management. Any other questions? I'm happy to talk about.
Yeah, so what's next for Yuma? Where are you guys headed next?
So some stuff I already talked about the asset management. That's kind of like our big push for the second half of the year. So maybe we'll be back on in the fall talking about that once it's live with more and more details. That's our kind of big push. Some other stuff that's coming up, we're going to probably be piloting some X spaces with subnets in the accelerator program. So get a little bit more awareness out there in the Twitter sphere. I think we're shooting to have our first one go live prior to the end of the summer. So there'll be more stuff happening there. What else? Our incubated subnet, our longest standing incubated subnet, Coinmetrics, Subnet 55, They actually had some exciting news drop this week. They're being acquired by Talos. For those in the audience that do not know about Coinmetrics, I'll just kind of give you the quick TLDR. They provide Bitcoin data and blockchain pricing data to like financial institutions. So when these ETF products need Bitcoin price data, like the Fidelities and the BlackRocks of the world, they use Coinmetrics. If you're ever watching Squawk Box, CNBC, and Andrew Ross Sorkin's up there in the morning, right, and it has like the Bitcoin price or the ETH price, it says like CM, that's Coinmetrics price data on CNBC, right? So they are a big player in the data business, serving a lot of institutions. And so their Subnet Precog is a Bitcoin price forecaster. They're opening a public API in 2 weeks. So they've been testing all these interval forecasting, volatility forecasting, trading strategies. And so now they're opening this up within their product to a public API where anyone can start tapping into the subnet. And so I think this is a great example of a few things. One, it's a great example of a product where people may be touching Bittensor and have no idea, right? Like it's just happening and it's providing value. Two, it's a great example of a subnet that came into the community and came into the ecosystem as more of like a force multiplier. And what I mean by that is a lot of the subnets are kind of startups. Like they are starting from scratch as a brand new business, and the subnet is the product, right? It is the thing they are going to build and then grow from there as like kind of the base, right? They already had this existing revenue generating business. They had all this great data. They had all these great customers, and they tried to figure out a way of like, how can we take this and create new products and new services around it? And so that was their vision. We helped them incubate it. They launched just before DTAO. And so here we are 6 months later since launch, and they're now finally opening that up to their customers and the public as well, right? So that's, I think, really exciting of a great use case of like this just being a force multiplier into someone else's existing business to create something that could otherwise not have been created. So keep your audience and your listeners should keep their eyes out for that when the Coinmetrics team drops that in the next couple of weeks.
Yeah, I will definitely keep my eyes open for that. I hadn't realized that subnet was run by. I didn't realize who they were, and how big they were, and how sort of how and the fact that someone of that size and that sort of importance is running a subnet. Right, there's a couple of those, but that was one I had.
Yeah. There's just like everyone else in Tao, like people just started hearing about it, coming to it, and it really wasn't really like a big to do. They were just like, we want to launch a subnet. How do we do it?
yeah, that's pretty awesome.
So they've got a really great team. They've been iterating on some good stuff. So I'm excited for them to kind of move into this next evolution.
Outstanding. All right, Evan, this has been awesome. I really want
Thanks
to
for having me, Mark. I appreciate it.
Come back anytime if you want to show something.
We will.
Love to have you back.
For sure.
So, all right, sir. My name is Mark Jeffrey. This has been Hash Rate. See you all next time.